Hello, and welcome back to Explain the Charts. Today, June 10th, 2025, we're taking a look at EURUSD, combining both the news and technical analysis to give you the full picture. Recent news indicates the EURUSD pair is reacting to U.S.-China trade talk progress and U.S. CPI data anticipation, as well as some possible slowdown of the U.S. economy. Bloomberg analysts suggested a potential overshoot to 1.40, which we'll evaluate based on the charts. Let's start with the one-day chart. We can see a fluctuating trend over the past year. Zooming in on recent candles, we see the price is around 1.14, which might act as a point of resistance based on recent news events and previous price action. We saw a high in April of 1.14738, and then the price crashed down to around 1.08, showing bearish divergence, and since then we are trading around 1.14 again. Now, let's switch to the 1-hour chart for a closer look at recent price action. The 1-hour chart shows some indecision, with a number of small-bodied candles suggesting consolidation. We might find some support in the 1.136 range based on the candles in the past week. Looking at the 15-minute chart, we can pinpoint even shorter-term movements. The price action seems range-bound between 1.14 and 1.145. Given the news about U.S.-China trade talks, we can see a slight upward drift, perhaps reflecting some optimism in the market. However, upcoming CPI data could easily reverse this trend if the data disappoints. It is important to remember that recent retracements around 1.1500 and bearish divergence suggest bulls may be losing steam. If sellers can break the support level near 1.1370, then a deeper correction towards 1.1315 is possible. A break of 1.1455 will challenge the bulls ahead of the June 5th high at 1.1495. In summary, the EURUSD market is currently influenced by U.S.-China trade developments and upcoming CPI data. Key price levels to watch are resistance around 1.1455 to 1.15 and support around 1.1370 and perhaps as low as 1.1315. A breakout above 1.15 with strong volume could signal further bullish momentum. Conversely, a break below 1.1370 could lead to a bearish correction. While the 1.40 target seems far-fetched in the short term, continued positive developments in the Eurozone and a weakening dollar, perhaps due to U.S. economic slowdown fears, could make it feasible in the long term. For now, monitor the key price levels and news developments to make informed trading decisions. Thanks for watching Explain the Charts and happy trading!